have I got here? I'm not trying to trick you yet. All right.
You have a $2 Federal Reserve note.
So, you know, you guys are good libertarians. I like you guys. A lot of people would say it's a $10 bill. Are they right? Well, depends on your perspective, right? So let's do an experiment.
That's right. Is it a $10 or a 2? Yes.
It says 10, so most people...
The way you were holding it, the lights.
Most people would say it's a $10 note. You know better, of course. But let's start this presentation by doing an experiment. And some people might point out that this is... there's a law against destroying legal tender currency in the US. But that's an unconstitutional law. And as they say, if freedom is outlawed, only outlaws are free. So, what have I got now?
Nothing.
Have I got 2 $5 notes?
No.
No, I haven't, right? 2 worthless pieces of paper.
No, you can fit them to the bank.
Maybe. But if you only have this piece, what is it worth? Nothing, or a cent or 2 perhaps, in best case. You can use it to scribble on maybe, or emergency toilet paper, but it's not worth anything, right? It's a worthless piece of paper, and this tells us everything about our currency system today. So this is my first topic of a presentation today, our monetary system, and how does our monetary system work, or doesn't work if you want. And I will talk about gold manipulation, the price of gold market mechanics, how the gold market's working today. I will then touch on Singapore. Singapore is the best country in the world for asset and wealth protection and preservation. And I will finish off with introducing BullionStar. What do we do at BullionStar in terms of offshore bullion protection? So the experiment that I just did, tearing the dollar note, that shows us that the money of today, it's not divisible, obviously. It's not durable. And it has no intrinsic value. Because fiat money, and this is referred to as fiat money. Fiat is a Latin expression, which means essentially let it be. Money that is created out of thin air, but doesn't have any backing or any real intrinsic value. So fiat money doesn't have the characteristics that money is supposed to have to be functioning properly as money. Because what is money? Well, first of all, a medium of exchange, payment means. That makes sense, serving as the intermediary in between the exchange of goods and services. Unit of account means frame reference. So if I tell you that I have $10, most people have an idea what is $10, what is its value. And store of value. Store of value is interesting. I'm going to do another experiment here. So I have 2 treasure chests. So let's now assume, if you want, for a moment, that we have a ship that sunk 100 years ago. Probably not in Nevada. We have to, to move to the, let's say, the Caribbean Sea or Pacific Ocean. But the ship sank 100 years ago, and on it there were 2 treasure chests. So I'm going to hand this out here. So if you can help me with this one, sir, just for a moment, ma'am, if you don't mind. So 100 years ago, those 2 treasure chests had, the content, I should say, inside those 2 treasure chests had the same value. When the ship sunk a century ago, they had the same value. Now let's open them and see what's inside. If you start, ma'am, what do you find inside? $1 bill. A $1? Well, it says 20.
I said 20.
Yeah, so it's a $20 bill. So it's a $20 bill, and that had the same value as this item.
This is a 1-ounce Canadian gold maple leaf.
Correct. Very good, very good. And you don't get to keep it, by the way. So those 2 items had the same value 100 years ago. But today, of course, the $20 bill, you can get a cheap meal maybe on the street or one wager at the blackjack. And that's what you get for a $20 bill. But the 1 ounce gold coin, of course, is worth some $1,250, $1,300. So this tells you how much our money has lost in 100 years. Because gold is keeping its purchasing power over time as opposed to the currency we have today. So we can see that the currency has lost some 98, 99% of its value in 100 years. So the US dollar, that was supposed to be the gold-backed currency, the premier currency of the world, is losing its value day by day. And gold, of course, is the very opposite to fiat currency. Because if we look again at the characteristics of money, what characteristics do money have when the free market decides? Well, first of all, durability. And the experiment illustrated that the fiat currency doesn't have any divisibility, or any durability, whereas gold, of course, doesn't oxidize, it doesn't corrode, it can't be deleted easily, and it doesn't burn. So obviously, gold has much better durability than fiat paper currency. Possibility to move, gold is portable, of course. Divisibility. Well, the fiat currency wasn't divisible. How about gold? Is that divisible? Yes. I have here a 1 gram gold bar. Quite small, so that's worth about 50, 55 US dollars. Let's now try if it's divisible. So I'm going to do the same as I did for the US dollar. And gold is, of course, soft, but it's very malleable, so it takes a while to split this into 2 pieces. It usually works, eventually. And gold is very malleable. That's one of the characteristics. And that means, of course, that if you have a 1 ounce gold coin, you have this 1 ounce gold coin, and you stretch this out into a thread. How long, anyone knows, how long of a thread can you stretch a 1 ounce gold coin? Anyone else? A mile? 10 miles? It's actually 50 miles. 50 miles, so that's like up and down the strip about 6 times, which is quite incredible. This small coin can be stretched out to a thread 50 miles. Now I'm going back to my 1 gram. Okay, so I managed to split it into 2 about equally sized pieces. Now, I had 1 gram starting out. What do I have here? Half a gram and half a gram. And proportionally, of course, it has the same value. So together, still same value. I started out with $50 worth of gold approximately, and I have $25 worth of gold in each piece, as opposed to this worthless piece of paper. So this tells you about the divisibility of money, and gold has, of course, much better divisibility than the fiat currency. Other characteristics, fungible, means that each and every piece has the same value and is interchangeable. Intrinsic value, again, gold has its foundation in being the most superior metal out there. It's one of the best metals that have ever been discovered, because gold is soft, as mentioned, malleable, has great conductivity, and it's a great metal with superior metallic characteristics, and that's why it has intrinsic value. So gold is valued by the marketplace, and gold is money without government interference. Of course, politicians don't understand money very well, so they always succumb to money printing. And of course, politicians are always trying to create something out of nothing. And what happens? Well, we get the business cycle, we get the debt bubbles, and we get a system where savers who try to save money without speculating, they are losing value through inflation. Inflation is, of course, the increase in the money supply, which has an effect that prices are going up. And inflation is nothing else than a redistribution. So when the government or commercial banks are printing more money, what happens is that the early receivers of the new money, meaning the commercial banks, the central banks, and the government itself, is gaining on behalf of the late receivers, which are normal people, of course. Now, when I split the $10 note, we saw that this is not real money from a real market perspective. But what is even worse, perhaps, is that for 92%, more than 9 out of every $10, I couldn't have done this experiment. Why? Because there's only 8% of our money supply today in the US dollar. It's only 8% that consists of bills and coins. The rest are just electronic currency in the electronic system, just digits on a bank account. So for 90+% of the money, I couldn't even have done this because it doesn't even exist in the physical realm. So the vast majority of money today is, of course, not issued by the central bank or the government. It's actually created by commercial banks, and it's created when banks are extending loans. So if you walk up to the bank, you take out a loan, the bank lends you money. The money is just created out of thin air. And this is quite stunning. A lot of people actually, it's easy to understand, but it's difficult for a lot of people to believe that this is how it's actually working. But this is the monetary system of today. It's called fractional reserve banking, of course, and banks are creating money out of thin air as loans. But the interesting thing is that they are not really they're not lending anything, because if I have this treasure chest here and I'm lending it out, I expect to get it back. But to be able to lend it, I need to have it first. The banks don't need to have anything to create money. So there's no counter performance by the banks. They just create the money out of thin air. They loan them into existence. It's just done as a bookkeeping entry in the accounting system of a bank. So it's counterfeiting, legalized counterfeiting, in my opinion. It's a fraudulent system. Let's have a quick look at the track record of the US dollar. And it has, of course, in the last 100 years or so, since 1917, lost about 99% of its purchasing power, which essentially means if you, 100 years ago, something that cost 1 cent 100 years ago cost $1 generally today. So that's 99% loss in purchasing power in 100 years, which is quite shocking. Of course, they are baby stepping this, so you don't really realize it. But I mean, if you just think back 10 or 20 years, or whatever time period, what did, a gallon of milk or an ice cream cost 10 or 20 years ago? Then you can see that, oh, well, real items are actually becoming more and more expensive by the day. So now let's turn to the gold market. To understand the gold market, how it works, we need to take a look at the dominant gold markets of the world. And to a lot of people's surprise, actually, COMEX, the US futures market, is not the largest gold market in the world. It's actually the London market, because the London market is 88% of global, total global turnover in gold trade. So the London market stands for 88% of the total gold market. COMEX is only about 8%. So let's look at those two markets. What is traded on the London gold market? Is it gold? It's not gold. It's what's called unallocated gold. What does that mean? Well, it's paper trading. Essentially no backing of any real physical gold. It's gold created out of thin air. So the way the market works is that if you have a depositor of physical gold, you can actually deposit physical, if you're a large customer, that is, deposit physical gold into a bullion bank. If you deposit gold into the bullion bank, what does the bullion bank do with the gold? Do they safekeep it for you? No, they don't. Just like if you deposit currency into the bank, they keep it in their own balance sheet, and they lend it out, they sell it, or they allocate it elsewhere. So when you deposit gold, in return, you get a claim on what used to be your gold, but you have lost ownership of it. So you used to have physical ownership, but you lost it in return for a mere claim on what used to be your gold, and at the same time, the bank is selling it off, or they're lending it out, or they're allocating it to, for example, an ETF. So, I mean, you can see in this way how the bullion banks are actually lending out gold in many, many steps, cascading through the system. And this is how they create much more paper gold than there is physical real gold. Let's look at the volumes traded at this London LBMA gold market. And this is interesting because there's 6,000 tons of gold traded each day in London. We know this from a survey because they don't actually continuously publish trade data. They are a very secretive organization, the LBMA. But there's a survey that's telling us that there's 6,000 tons traded each day. That means 1.5 million tons per year. Well, let's put this into perspective. Because how much gold is mined annually in the whole world? It's 3,200 tons. So you can see that there's almost double as much gold traded in one day in only London as there are mined in the whole world in a whole year. And this is astounding. 1.5 million tons annually compared to 3,200 tons mined. And how is this possible? Well, the answer is it's not possible, of course, because it's not gold that's traded, it's paper assets with essentially no backing. We know that in London, there's 6,500 tons of gold stored. Altogether, 6,500 tons. Also know that the Bank of England is holding 4,734 tons. We know that ETFs in London, they are holding close to 1,700 tons. So if we start with this total amount of gold, 6,500 tons, we deduct what is held by others, we arrive at 87 tons left. So we have these 87 tons to back up this massive trading of 6,000 tons per day, 1.5 million tons per year. So we can see that there's basically no backing of real physical gold for all this paper trading whatsoever. So it's totally a paper market without any connection to the physical world. How about COMEX, the US futures market? Well, COMEX is more covered, and it's well known that it's also a paper market, essentially. Of course, you have the possibility to theoretically take physical delivery, but it's very cumbersome to do so. It's essentially a paper market. And I was checking the trade figures the other day. COMEX is a bit more transparent comparatively to the London market. I was checking the trade figures the other day, and there's now an open interest, meaning the total outstanding contracts is about 1,500 tons, but the registered gold is only 24 tons. So for every country, for every 1 ounce of physical gold, there's 63 owners currently. So 63 owners for every 1 ounce of gold. And what is even more staggering, perhaps, is that only 1 in 2,500 contracts actually go to physical delivery. So you have 99.96% of the gold contracts are cash settled. And even the one contract that goes to delivery is just a warehouse receipt, so it's actually not a real physical delivery. So you can see how this is a paper market. You know, it's very little gold backing up a lot of paper trading. Now, the unfortunate spillover effect here from these paper markets is for the price of gold. Because the physical gold market, as you can see, the physical gold market is a totally different thing from these paper markets. But still, the price of gold is actually inherited from the paper markets to the physical market. So, of course, London and COMEX, they are the two largest markets in terms of trade turnover. So they dictate the price of gold, and they are the most liquid markets. But then the physical market are inheriting the price. So for the physical gold market, it's actually not demand and supply for real physical gold that sets the price. It's just inherited from those leveraged synthetic paper markets. But what we can see over the last few years has actually been that when physical demand for real gold, when people are requesting real physical gold, when demand is going up, a lot of times price is going down. And I mean, economics 101 is saying that, of course, if demand is increasing, the price should go up. That's natural sense. But what we see on the real physical gold market is the opposite. So actually, a lot of people are turning from the paper market to the physical market. But it's the paper market that's setting the price. So the price goes down if there's less demand on the paper market. Doesn't matter if demand is high on the physical market. I mean, as a physical gold holder, the question a lot of people are asking is whether are we, forever screwed by this paper market setting the price of gold. But the great threat to the paper markets are the Asians. So you have the Chinese, Southeast Asian gold buyers. They are taking physical delivery of real physical gold. They are tired of saving in US debt. They no longer want the US debt. They want real physical assets. So we can see how China, for example, China has been, over the last few years, vacuuming the world for physical gold. They buy up as much as they can without breaking the neck of the market. And the Chinese are not really as, in this sense, they are not as naive as Westerners when it comes to trusting banks. They don't trust the banks as much. They want to keep their savings in their own physical possession. And they understand how gold is not really investment, because it's not. It's savings. It's savings. It keeps purchasing power over time. So it's real savings. And the Chinese and the Asians understand this much better than the Westerners. And they also understand how gold can safekeep you from currency destruction, safekeep you from, foreign influence, if you want, from, central banks and politicians meddling with the currency policies. So what is interesting over the last 5 years is that we've had this immense flow of real physical gold from the west to the east. And that has a lot of geopolitical implications, because in the end, and this is certainly not covered on CNN or NBC, in the end, whoever has the gold has the power. Because gold is power, gold is real wealth, gold is real money. And we see this transfer of wealth from the west to the east as we're speaking. So the Asians, China and India over the last decade, there's been physical deliveries of some 20,000 tons of gold. And it's not, it's one-way traffic. It's not leaving after it's been imported to these countries. So this Asian buying spree is interesting, because what I'm trying to say here is that the stockpiles of the available gold is diminishing very quickly. So the Asian demand is actually much higher than there is supply of newly minted or newly mined gold. So we can see that the gold production today is not enough. It's not sufficient to actually satisfy the Asian demand. So instead, the stockpiles are actually going down, and there's less and less gold available in the physical form. And this is something like a bank run in slow motion, because less and less gold available. And in the next few years, if this trend continues, there's just not going to be enough physical gold out there. And what I think is going to happen when there's not enough gold is that people will realize that the paper gold markets, the paper gold is not worth anything. So in all likelihood, the price for real physical gold will disconnect from paper gold, meaning that all these paper derivatives, options, certificates, whatever it is, will become more or less worthless, whereas the price for real physical gold significantly with values. If we look at the price of gold, today I think the spot price is something like 1,255 US dollars per ounce. But gold is ultimate wealth, gold is ultimate value. If we put the price of gold in perspective to the US money supply, we get some interesting figures. Because the US dollar money supply today, how much US dollars are there out there in the world? Something like 18 trillion US dollars in circulation currently. Now let's compare that with the gold in the US. So the US Treasury claims to hold 8,133 tons. I say claim, of course, because this hasn't been audited in, well, forever, more or less, some 40, 50 years at least. But let's assume that they actually hold it. So 8,133 tons, so that's some $0.34 trillion dollars. So we can see that there's about 50 times as much US dollars in circulation as the US Treasury holds gold. And this implies, of course, if we were to today return to a gold-backed currency, the price of gold would have to be some $65,000 per ounce if we were to have a fully gold-backed currency today. And even if we were to go back to a 40% backing, which used to be the historical backing, the price of gold would have to go to $28,000 per ounce. So this also tells us how much the US dollar has been eroding in real purchasing power. I mean, the US dollar, until the Nixon shock in 1971, was supposed to be gold-backed, right? But we can see today there's nothing, no backing whatsoever, not even any indirect backing. We have 50 times as much US dollars as we have value of gold. Well, because the French were actually requesting physical delivery of gold, and they realized that, well, there's not enough gold. We're gonna lose all our physical gold if we have it delivered, because there's much more US dollars in circulation than actual gold. So that's why Nixon abandoned the gold window. And so, yeah, just not enough physical gold. And this is always the way it goes. You know, politicians are always succumbing to printing money. Even, you know, if you have a gold-backed system, they are always, you know, sort of resorting to printing money because they can, and then you know, it goes bad. So, of course, BullionStar is established in Singapore. I'm Swedish by origin, the most socialistic country in the world, Sweden. It's a wonderful country. Nothing works anymore. Crime is rife. Healthcare is going down the drain. Of course, we have a refugee crisis, and yeah, quite frankly, I'm happy not to be there. So, you know, yeah, Sweden is the worst example of socialism. Nothing gets done, it's very inefficient, and, you know, it has a rosy picture on the outside still to a lot of people, but in reality, you know, it is the best example of what happens to socialism in terms of inefficiency. And, you know, people die queuing up for healthcare, and, you know, if you go to the emergency ward, you have to wait for four days and so on. So it's not working. Singapore is, of course, the opposite. So I moved from very polarized socialism to Singapore, which is perhaps the most libertarian jurisdiction in the world in some extents. Singapore is arguably the most business-friendly country in the world. Very little red tape, very low taxes, a very stable government, and strong property ownership rights, and essentially no violent crime whatsoever. So it's a great jurisdiction. It is the new Switzerland in this sense. And Singapore, they're very good diplomats as well, because they understand that, I mean, Singapore is too much of an important hub for any of these supranational agencies like OECD and, you know, all the George Soros-run organizations to put them on any gray or black lists. So they manage really well in terms of diplomacy to avoid getting blacklisted or gray listed. And the government actually understands that the private economy is the backbone of the economy. So instead of meddling in everything, they try to incentivize and catalyze the private companies to, increase productivity and to increase the education of the labor force. So it's a different approach to what we see in the US and in Europe. Now, if you decide to buy gold, the question is always how to store it. I advocate, even though we offer Bullion vault storage, and I'm going to come back to that, but I always advocate for you to take physical possession first yourself. You should have some in your own possession because you have no counterparty risk when you hold it in your own possession. How to hold it? Well, there's just as many ideas as there are people, but you can hold it in a safe deposit box. Of course, if you hold it in a safe deposit box, there's a risk. You have a counterparty risk. The bank cannot seize your gold, although, of course, if there's a bank run or anything like that, the bank might close their doors, and then you can't gain access to it. But the bank can't confiscate. Even if a bank goes under, they're not supposed to be able to just confiscate it outright. But there's many different ideas. I've heard everything from, like you have some minced meat, and then you take your 1 ounce gold coin, you put it in your minced meat, and you put it in the freezer. And you have to make sure that your partner, of course, is not like throwing it out after 2 years, because then you're in trouble. But there's many ideas, right? So, or you dig it down somewhere and so on. So as everything else, diversify, spread your risks. And for bullion, Singapore is the best jurisdiction in the world for storing precious metals. So it has no taxes on bullion, meaning there's no sales tax, there's no import or export tax, there's no capital gains tax, there's no dividend tax, there's no death tax, there's no taxes related to bullion whatsoever in Singapore. There's no reporting requirements. So if you buy bullion from us in Singapore, we don't report to anyone, whether domestically or internationally. Buying bullion or buying assets for that matter is and should be your private matter. So we don't report to anyone, fully confidential. And the Singaporean government is pro-gold, meaning that they actually try to create a transit trading and storage hub for gold in Singapore. And it is quite interesting. The Singaporean government agency, trade agency, i.e. Singapore, they are incentivizing companies, bullion companies, to set up in Singapore. Just imagine if the federal government agency in the US were, targeting gold industry to flourish in the US. That wouldn't happen, would it? Government agency in the US comes out saying that, the US is going to be the next trade and transit storage hub for precious metals. It's quite the opposite. Singapore also is one of the safest countries in the world, and that has the great added benefit that insurance premiums are quite low in Singapore, and in turn, that makes it possible for us to offer very competitive storage fees. And also, property ownership rights are very strong in Singapore. So, BullionStar, what do we do? Well, we offer offshore bullion protection, and the way we do it is quite unique. We are combining a very good online usability interface, which is very user-friendly. You can control everything online, 24/7, but we don't hide online. We also combine it with having a physical shop. So it's online usability combined with physical accessibility. So when you start to set up an account with us, I think I speak for a lot of people saying that if you're going to open a bank account, for example, you get hassled. You get hassled in infinity. You have 7 different steps. You have to fill in all the forms, and it's all the bullshit. And when I opened a bank account in Sweden, so then they are giving me, I have to sign off of the terms and conditions. And yeah, where are the terms and conditions? So then she's printing me like 50 pages. So I'm saying, so there's people in line behind me. All right, I'm just going to read through them. And when she's getting a bit anxious, nervous, well, can you stand aside? Well, you asked me to sign, so that means it says that I've read the terms and conditions, right? So I have to read the terms and conditions. So this is, of course, what you get when you set up a bank account. There's no one reading them. So with us, we make it simple. It's a one-page sign-up. It takes 1 minute. And then you can start to buy or trade with us. Like any e-commerce shop, it's arguably much easier to place an order with us than to place an order on Amazon or whatever e-commerce system you'd like to compare with. You just select the items you'd like to purchase, and we only deal in real metal. So it's actually real allocated, segregated metal with real legal title. So if you buy say a gold bar, which has a serial number, that actual specific gold bar is your gold bar. If you store with us, we take a picture of it. You can see the serial numbers. You have a serial number on your invoice. And you can take delivery of this bar, and that's the bar you're going to get. So it's real physical gold. You can, as I mentioned, have everything handled online. You never need to come to Singapore to deal with us, but you have a reassurance that you can always come and visit us. And with the shop we have, you can actually come into our shop without any prior notification, physically audit your metal. You don't have to tell us even. You just come into the shop, which is more of a bullion center. It's a shop. We have showcase displays, and we have a vault integrated into the same venue. So you can just show up to physically audit your metals or actually withdraw your physical metal on site, just like that. Singapore is, of course, a long way from the US. So what do we do in terms of storage? Well, first of all, we have full insurance protection. That's important, even though Singapore is extremely safe. We have full insurance protection with one of the largest, what's called specie underwriters in the world, XL Insurance, for full replacement value, all risks. So that's important. Then we have 5 different auditing methods. So I just mentioned that you can come in yourself. You can do a self-audit. We'll take you into the meeting room. We bring out the bullion from the vault. You can audit everything yourself. You can see that the serial bar numbers are matching those on your invoice and the pictures we took when it was transferred into vault storage. We have third-party audits done by a company that's called Bureau Veritas. They are LBMA approved, and they are one of the largest auditing companies for precious metals in the world. So they do full audits twice a year, biannually, and we publish the audit reports online. So when you're logged into your account, you can check the audit report. We also have what's called the live audit report, which works in the following way. You can actually see everyone else's holdings, but anonymously, so under the account number. So you can see account number 1, 2, 3, 4 holds 20 ounces of gold. The next account number holds 50 ounces of this specific product, and you can see, of course, your own account number as well, the holdings under that account number. So everyone can see everyone else's holdings anonymously through the live audit report. So the auditing methods are very, we try to do everything very transparent to the customers, but of course confidential for anyone else. So this is the fashion we've set it up. Of course, you have full control online. As I mentioned, you can sell, you can audit, or you can withdraw any time, and you can handle all of that online. In terms of storage fees, how much do we charge for storage? We have 0.39% per annum for gold storage. And I challenge anyone to find anything cheaper anywhere, because this is, of course, storage for real physical items. It's not that you own, ounces or grams in some larger holding. It's real items that you hold with full legal title. So 0.39% per year for gold, 0.59 for silver. So for $1,000, that comes to $3.90 per year. And that's calculated like the interest rate of a bank. So it's calculated daily, and then you add up for the whole year. yeah, as mentioned, we don't hide online. We have a storefront walk-in bullion center in Singapore. I think Singapore is the only country in the world where you can actually have a shop like this. We have several $1 million worth of metals on display. Just walk-in shop, heart of Singapore, central Singapore. If you're into precious metals, come and visit us if you're ever in Southeast Asia. It's quite cool to see all of this metal on display. And the shop has quite a few different interesting features. You can, for example, if you have jewelry, scrap metal, we have a scale where you can weigh your metals and see your value. We have some testing facilities. We have a few different features that are pretty cool. So this is a reassurance for a lot of people that they can actually come to visit us to audit or physically withdraw their metals. Another unique feature is that you can hold not only bullion on account with us, but you can actually hold cash funds on account with us as well. So this goes under what's called a stored value facility. It's not a bank account, it's a stored value facility, and this is a framework unique to Singapore. PayPal uses this for the Asian market, so it's holding funds on an account, but without it being a financial institution. So we're not defined as a financial institution, but you can hold funds on account with us, and then you can use those funds to buy bullion, and vice versa. If you sell bullion, you can have the proceeds back to the account. So that means that you can trade in and out of physical positions, physical bullion, without having to involve your bank. So you can average in and out of positions, and you can fund your account in US dollars, euros, or Singapore dollars. And of course also, we're not a bank, so we're not under the fractional reserve banking system. So we have full backing in cash and bullion for the funds held. So this is a good alternative to actually open an offshore bank. It's difficult for a lot of people to, especially American citizens, to open bank accounts offshore. So this is a good alternative to that. The only restriction, of course, is that you can't transfer to any third parties. You can use your BullionStar account to purchase bullion, or you can have the funds withdrawn back to yourself, but you can't transfer to any third parties, because then we would be a financial institution. We don't want to be a financial institution because we have no reporting requirements as it is now. So that is the borderline. But it's quite handy to save on fees, to be able to trade, to be able to average in and out of positions. Another product that we are quite proud of, what I think is our most fantastic product, is the BullionStar Gold and Silver Bar. So this is our own gold and silver bars. And what's unique with these products are that they are traded. You can trade these without any spread in between the buy and sell price, meaning that at any given point in time, the buy and sell price is the same. So if the buy price for the gold bar is $5,000 or $4,000, let's say, it's a 100-gram gold bar, the sell price is also $4,000. So there's no spread in between the buy and sell price. Now, the next question is, most of the time, what's the hook? Well, the price premium, meaning the price above the spot price for the metal, is slightly higher for these BullionStar bars than for other generic gold bars. 1 or 2% higher. But so the trade-off here is between the spread, no spread, and slightly higher premium. But it's a tremendously popular product because it means that you can actually trade in and out of physical gold and silver without any spread in between the buy and sell price. So these bars have become, we introduced them, the gold, 2-3 years ago now, and they become tremendously popular. So to wrap up, what we offer in Singapore, well, there's no taxes for bullion in Singapore. There's no reporting requirements. If you deal with us, you have full online control of your physical bullion. We combine that with a physical shop where you can actually come in, you can request to audit or withdraw your metals. It's easy to get started. 1-minute process, 1-page sign up. Easy as that. No need to make it more complicated. Cash and bullion on the same account. Everything we do is physically allocate the segregated metal with legal title, no paper shenanigans. We don't deal with any, paper, fraudulent paper assets. It's the real thing. BullionStar Gold and Silver bars, no spread, and the most competitive storage fees in the industry. So I think with that, we have no option but wrapping up. So please feel free to approach me or my colleagues. We're all in gold suits, you can't miss us. Afterwards, if you have more questions, I think the next speaker is on in a couple of minutes. So thank you very much.